So again, my name is David Lai. I'm representing Invest Hong Kong, and I'm the deputy head of technology investment there. And so our organization is a government organization that it works on driving economic development for the city of Hong Kong. And given that it's historically been a financial hub in Asia, their goal is to continue to be that for Web3 and crypto, and that's why we're here today. And I'll pass it along to the panel.
All right, awesome, thanks. I'm Brett Harrison. Thank you for the flattering intro before. But spent most of my career in the prop trading space, Jane Street, Citadel Securities. Had a brief but harrowing run building a US office for FTX here in Chicago before I left just in the nick of time, I guess, to start my own company, which is called Architect Financial. And we have two businesses. We're a regulated introducing broker and broker-dealer under the SEC and CFTC. Think of us like an interactive broker's competitor. And then we're also in the process of launching our own new Perps exchange, specifically for perpetuals on non-crypto asset classes like FX, stocks, interest rates, et cetera, which I'll be happy to talk about more.
My name is Nathan Paredes. It was okay. The attempt was good, but so I'm with CoinFlip. We're the largest ATM operator by volume, crypto ATM operator by volume, operating in 9 countries. I think when I started we were 1, and I run our OTC business. So these two gentlemen have forgotten more than I'll know about perps and derivatives, but what I can give is a little insight into macro signal and kind of how retail investors are thinking about products like derivatives.
Patrick Hourihane. I'm local here to Chicago, traded at the CME and the Board of Trade. I am still a member of the CME. We will see if I will be a member of the CME in the next month or two. I got into crypto in 2019. I'm still in it, so I guess that's a good thing. What I've learned from being in crypto, it's a long game, not a short game. Been building infrastructure. I've got 3 companies, Membrane, which is on the settlement and clearing lending side. Test Machine, which is auditing, using reinforcement learning, AI, out of University of Michigan. And Paragon, which started out as an NFT company, and now we've pivoted it into structured products. So on the derivative side, it will be Paragon. That's what we're going to talk about today.
Sounds good. Well, as you mentioned, derivatives and the futures has been getting more and more popularity in Asia, especially in Hong Kong, and the regulators are trying to support that market. But for the panel, I'm actually curious, from your experience and from your company's perspective, kind of what are the primary ways people are trading crypto these days? Is it derivatives, futures, or is it going to be something else?
So for me, I think derivatives will be the explosive side of crypto. I think the options market is where we'll see the most growth over the next few years. And out of that, I also think structured products will be huge. I think we'll see a move away from the exchanges back towards OTC type trading. Given the current government that we have in place, I think it's more welcomed and more mainstream. So the walled garden, which everybody talked about years ago, I think that's going to go away, and I think we'll see a move more towards a proper OTC market, especially on the derivative side.
I love hearing that. So, for us, I mentioned getting a lot of retail signal. We're an interesting business because not just with the ATM side, but our OTC side is more retail focused. So I would say 80% of our business are first-time retail investors, high net worth, mass affluent retail investors. If I rewind 3 years ago, when I was looking at, the people coming in the door, they were just looking to get long exposure, and so we're a spot OTC desk, so a natural place to do it. Now, it's changed quite a bit. It's more sophistication coming in the door. I don't know if they just happen to do some really good prompting on ChatGPT, but, there's a lot of interest in not just long exposure, but how do you manage risk? How do they hedge against that? And that's where we're starting to see a pretty big thirst for perpetuals and kind of a use of that product as a hedge, but also as signal to see when they should buy and exit positions.
Yeah, when it comes to derivatives, crypto is not much different from any other asset class where typically derivatives trade as much, if not much larger than the actual underlying spot or physical asset. And there's a variety of reasons for this. One is the ability to go short easily besides just going long, the ability to trade on leverage, So putting up a smaller amount of capital to enter into a higher notional position without having to risk all that capital at the same time, often getting cross-margin with other assets in the same kind of derivatives clearing organization. And just in general, just the ease of being able to not have to hold on to some physical asset that might be hard to get your hands on. An example is, oil futures trade way, way more than any kind of like spot oil barrel market because it's pretty expensive to send oil barrels back and forth between people. And for a very, very long time, most people didn't want to actually get their hands on physical crypto, either for compliance reasons or being afraid of actually holding the asset in some kind of wallet that they might not know how to operate or could get hacked. And so the derivatives market grew extremely quickly. And even in our kind of current regulatory environment where it's kind of becoming friendlier to the idea of holding on to spot crypto, derivatives are still by far the largest asset in crypto. Perpetuals trade anywhere from 8 to 10 times more than the underlying spot assets. And again, the options markets are small, but that's definitely going to grow. I completely agree with you, Patrick. And that trend is just going to continue.
Yep, sounds very interesting. And as you mentioned, like derivatives, these aren't necessarily new, but what kind of innovation or challenge you see in the space for it to continue to grow and expand within the Web3 and crypto space?
Yeah, so perpetuals in particular were an innovation that I feel like crypto can take ownership for. Perpetual futures, which are futures products that don't have an expiry. Instead, there's like a daily or hourly settlement that kind of trues up the derivative price with the underlying. This is an invention from the 90s here in the US, but never really got traction. They never really got the ability to list on exchanges. And they were kind of forgotten about and mostly just an over-the-counter product until around 2012, 2013, when a few crypto exchanges like BitMEX brought those to bear. And for any exchange now, globally that lists both dated futures, futures that expire every quarter, and also lists perpetuals. The dated futures don't trade at all, and the perpetual futures trade, anywhere close to 100 billion notional per day globally. And so I think that crypto really turned what was a pretty esoteric, complex product and made it a Main Street product that even retail wants to get their hands on. And I think crypto can take a lot of credit for that innovation.
Yeah, on the retail front, I mentioned customers becoming more sophisticated, retail investors coming in with a lot more understanding and thirst for more complicated products. And so on the innovation side, obviously perpetuals were phenomenal, right? And you can look at platforms like Hyperliquid, and you can kind of see what they've been doing and how they've been performing. And when new customers come in the door, they're no longer looking at long-term allocations, just long-term allocations. They're looking at, okay, what else can I do here? And obviously with perpetuals, you've got great leverage that you can exercise, so they can actually start to speculate with a lot less capital than buying the actual underlying asset. So we'll talk about kind of convergence versus directional probably in the next bit, but I think that's really the innovation side is perps use in crypto. I think from a challenge, I think user experience is still an issue. I think that people that can kind of bring everything together for, at least on the retail side, into a nice experience of whether someone wants to be in spot, whether they want to participate in lending, yield products, and perpetuals. Obviously, just this week, Coinbase now launched their Bitcoin and ETH perps. Coinbase has done a great job with that. Robinhood, they're obviously tokenizing equities, so curious to see kind of where they take that. Both of those have very good user experience, so I think that's going to continue to be a challenge, but I think ground will be covered pretty quickly.
Yeah, I think the explosion in the perp market has been phenomenal for the last 2 years. And obviously, everybody needs leverage. I think that's going to push into the options side of the market. The options has not exploded. I think for options, we need a better lending marketplace. And that is actually starting to grow. Obviously, Three Arrows took it back a couple of steps, but people sitting on the larger crypto assets now are all looking to lend. So as we see the lending market expand, which we're involved in a membrane, I think we'll see options blow up. Obviously, fungibility, across the board, and I think that has to come through OTC options and ISDAs and credit lines, more like a FX marketplace. But that is where I see the market going. I mean, perps is great, but options, as we all know here in this city, options is where it's at. And I think that's where we move in crypto going forward. That's 26, 27. I think that's where we see the main growth.
Does it make sense? And then based upon like just current regulations with like Genius Act and even Hong Kong itself has introduced stablecoin regulation, how do you think these regulatory developments are going to impact this space?
I would defer to Brent on this. When it comes to regulatory oversight, as a builder, I don't think you can let it restrict you. I know you have to be aware of it. Right now, I'm told by our lawyers that keep building as long as you're not doing anything illegal, you're okay. Again, our side of the business is from the ground up, so it's early stage. As we become successful, we try to get our steps right. And, you know, as a builder and trying to step in, you know, if you let regulatory oversight weigh on you, you won't build anything or you won't get anything done. So, you know, for me, I've never thought much about regulatory until we become successful, and I hand it over to the adults in the room. But, you know, Brent would know more about this than me.
Sure. So with derivatives, one of the most important features or one of the biggest challenges is collateralization. So if you have a future that has $1 million notional value and they allow you to get 10x leverage and you have to post, you know, $100,000 of collateral, well, what actual, you know, means do you have to post that collateral? And in the case of something like CME, for the longest time that was dollars or it was treasuries, you know, some kind of commercial paper. Over time, CME innovated to allow you to post things like gold. Certain times there's maybe some, you know, ETF products and things like that that you can post as well. But one of the main innovations, in addition to that, is crypto that's really brought to bear, that is in use everywhere, and I think will really outlast this industry regardless of what happens to it, is stablecoins, especially as a means of collateralization for derivatives. Because if it's, you know, Saturday and there's big market moving global macro news and all of your positions have tanked and you need to put up collateral today and don't want to have to wait until Monday where your positions have moved another couple of vol points, it's really great innovation to be able to 24/7 be able to move USDC in and out of a clearinghouse, you know, immediately. So I think one of the big knock-on effects of, you know, the Genius Act passing now passing the Senate and getting you know, signed by President Trump is that I expect to see clearinghouses in the U.S. and the futures clearing merchants actually start to take stablecoins as collateral, which will be, I think, an incredible innovation for the markets and something that we already see in decentralized markets, but it'll be really great to see that kind of pull over to the traditional regulated exchanges as well.
Yeah, I was going to add that, you know, as far as how retail investors are interacting with perpetuals right now, that's exactly how we're doing it, right? Is stable coins, and you know, that makes things incredibly efficient, fast. You know, you don't have to worry about, like Brett's saying, with when you need to post collateral, it's there, right? You don't have to wait for the banks to open. It just makes things a lot more efficient in the markets. And obviously now with the regulatory clarity, that is going to extend into more centralized fashion. And it would be nice if that stablecoins start to get picked up as collateral everywhere. That would be phenomenal for everyone, and then not even getting into what that can do in emerging markets.
But on that front, like in the near term, as it picks up, do you still see that there's going to be a lot of differences between the Europe, US, and Asia?
Yeah, I think for me it's less about kind of Europe, Asia, US, and the differences between them versus I see it as regulated versus unregulated. You know, the US is not the only country in the world with strict regulations for derivatives. But right now there's a clear bifurcation of platforms out there like Hyperliquid, which has absolutely no regulatory oversight. You don't know if you're trading with an unsophisticated retail, a North Korean agent, like you have absolutely no idea, compared to something like the CME, which is like one of the most heavily regulated bodies, you know, in the world in terms of CFTC oversight. And the process of getting, you know, regulated as a clearinghouse in the US can take up to 5 years. And so I think, you know, I think that there are crypto exchanges globally that are starting now to sort of walk that regulatory path and work with regulators to get kind of explicitly licensed in places like the European Union, in Singapore, in Hong Kong, in Brazil, and now in the US as well. I think if you think about the number of US-based regulated exchanges for derivatives, more than half of them are crypto only. So kind of for years and years, there wasn't really any innovation in terms of people coming in and registering new exchanges. And now because of crypto, there's been such a, an impetus for people to try to get regulated. And I think that's a very positive thing.
Yep, makes a lot of sense to me. Before I continue on, I'll make sure if there are any questions in the audience. If not, okay. So just lastly, kind of, Patrick, you touched on it a little bit earlier, kind of like, what excites you guys the most in this space in the next, 5 years?
I think that the alts excite me and the movement of alts. I think as we mature, people start to think more outside the top 20 tokens, right, and Bitcoin and Ethereum. And there's some really meaningful projects out there. And it's hard to trade those. Perps generally are on the larger size projects. You can get them in the alts market, but it's opaque and spread prices are wide. I think as we press into more offerings and more the options, more derivative side of the market, I think we're going to see an explosion in the alt side. I think that's where most money will be made in the next few years, especially, as I said, options on that and more offerings in the alt markets. I think that's outside of Perps, obviously, but that's where we're looking to expand. Right now, Paragon, what we're doing is the secondary market is very opaque. It's all OTC. Block orders. You want to move large amounts of tokens. There are funds, VCs, and crypto funds that are sitting on massive amounts of locked and unlocked tokens. We are bringing that to the screen with options and credit facilities that we think is warranted. Trying to sell $1 million worth of tokens at a discount of 30% into the market and TWAPing it on a DEX, it's just not feasible. I think you're going to see more movement in the alt markets, and I think that's where we see the upside.
I'd agree there. I mean, on the OTC side, altcoins are always a challenge, right? Because, we get a lot of interest there because there's just people are struggle to get into it. They don't want to take, ownership of it. There's risk there. I think if alts expand and you get into pushing them into derivative products, it enables them to get exposure to it without all of the risk of custody on that asset. So I think it's just going to explode the interest in altcoins. But outside of that, I love tokenization. I know we're not talking about that, but it's tokenization to me is something really special because we talked, I think earlier, they were talking about credit facilities like private credit, what you can do in the real estate market. I think as tokenization matures, being able to give investors access to different types of products they previously weren't able to is important. And then naturally, there's a lot you can do with other vehicles like derivatives and perpetuals into those products once they are available.
Yeah, I think continuing that thread, whether it's tokenization or packaging in the form of derivatives like perpetuals, the thing I'm most excited about now in the next couple of years is the push of these kinds of technologies and these innovations into the traditional asset classes, which are much, much, much larger than crypto now. If you think about if crypto trades around 100 or 150 billion globally, interest rate derivatives, if you include OTC, trade something like 10 to 20 trillion globally every day. And so the idea that bringing some of these assets to bear in a form of either on-chain tokenized assets or kind of continuously settlement derivatives that kind of trade 24/7 and have easy collateralization with things like stable coins. I think these are like true great market innovations that will actually bring improvements and better cost structures to the world of finance kind of globally.
Sounds good. Well, thank you again for the panel for all your insights and information. I learned a lot myself. And on behalf of all of us, we also like to thank Dexonic for organizing today and inviting us to talk. If you have any other further questions, you can reach out to us on LinkedIn or kind of catch us here at the event. Thank you very much, guys.